Hey, welcome back, everybody. We've got another webinar on deck for you. My name is Patrick. Thanks for being here with us. As we start to look at new crop, we wanted to just take a step back and review some of the strategies and contracts that are available to you, as you start to look at your 2024 marketing. Keep in mind what we're talking about is all for example purposes and make sure they fit into your risk tolerance. How we're viewing these strategies right now in this instant is based on a flexibility standard. We did include some pros and cons as we go through this presentations here. But the thing everybody's most familiar with is likely your cash sale or your hedge at your elevator. You call them up, you sell 5,000 bushels at X price. This is generally the most inflexible strategy. But that's not to say it doesn't have its pros, including no margin. You get your futures price locked in. It's going to create some cash flow for you. The cons now, obviously, more is that you have a fixed delivery point. You have to take those bushels to that elevator or ethanol plant. Your upside is gone. You've locked in the futures price, and you generally are going to have to commit these bushels. Basis is kind of a neutral, up for debate. And then as far as exiting or closing these early, they're okay, in that regard, depending on whether or not you've got the bushels. Next strategy we're looking at here is selling on the board. And this is really similar to selling at your elevator, but there's a couple major differences. First, to get it out of the way, this is a marginable position, so it's a lot less friendly on your cash flow because if the market goes against you, you're going to have to put some money into your hedge account unless you prepaid for that already. Now, on the flexibility side or on the pro side, you can choose to deliver these bushels wherever you want. And then as we move over into the moderate side of things, where you're hedging with the elevator, those bushels are pretty much committed. On the board, if you don't raise all your bushels, you can certainly exit this without feeling like you have to being forced to deliver on these contracts. So that's where you get a little bit more flexibility. You can manage your basis. You can pick your delivery point, whether you like the elevator or the ethanol plant. The biggest cons, though, are yes, it's marginable. And similar to your HTA or cash with the elevator, you don't have any upside potential. The other thing we wanted to talk about was buying a put option. We consider this to be the most flexible position. Okay, and what this is really best for is whether if you know your bushels or if you don't, if you're really uncertain about your bushels, but you really need to protect a price, this is a good strategy to use. You have fixed risk, you have potential upside. You don't have to commit the bushels to anywhere. In fact, if you don't raise the bushels, you can just close this position out. You're going to be limited to your premium paid, and you move on. Chances are you're going to get an insurance payment to help cover that. These are fairly easy to move in and out of. Again, in the neutral category, your basis is left open. Now, on the con side of things, and we're going to go into this in a minute here about new crop. It can be the cost. When you're looking at option premium, they can be expensive relative, to what you're trying to protect. And then again, your price floor is, of course, what usually well underneath what the current futures price is. So, for example, if you were to buy like a 470 D's corn put today, it's going to cost you 40 cents, which means your actual price floor is 430. Whereas if you were to make a futures sale today at 470, you would have that 470 price. So again, just a couple different scenarios to keep in mind. Wrapping things up in here, really we've always believed that for us the best strategy is to divide your bushels up into thirds, and you should market 1/3 either in cash at the elevator or selling futures on the board, and then you should use 1/3 to do some kind of option strategy for a little more flexibility and some potential, and then leave 1/3 of your bushels open. And that's going to be comfort level, risk to reward. Okay, if the market runs really higher, you're going to feel great on those open bushels. If it rips lower, you're not going to feel so great. So again, manage your risk individually. That brings us to our next point. What are you comfortable with? Some guys, really love the inflexibility, but they don't like the margin calls, so they stick to those elevator sales. Other guys, maybe you're looking for a little bit more flexibility, but you don't really want to you don't want to deal with the low price floor of a put option. So instead you want to start, selling the board. Pick what you can live with and where you want to be comfortable. And lastly, we just wanted to point out as we start to think about 2024, what is the market offering as you look at these strategies? Last year buying put options made a lot of sense. Prices were really good and really high. You could afford to pay the premium because you were still locking in profitable levels. This year, I don't know at this point if it makes as much sense to be looking at buying put options where you're spending that option premium to protect a price floor that might be below your break even. On the other hand, perhaps using cash sales or board, selling the board futures market makes a lot more sense. And then once you get to a comfortable level of cash sales sold ahead, perhaps using that to buy call options this year in case of a drought or weather event makes a lot more sense. Once you have some potential profitable levels factored in, you could consider reinvesting some of that money into some call options in case this market really gets away from us. If you guys have any questions on this, please let us know. Email us, call us. We're more than happy to help. Hit the like button, hit the subscribe button. We really appreciate you tuning in, and we'll talk to you guys again here soon.